Welcome to Wall Street Confidential, the show we give you the inside scoop as to what's really happening on Wall Street. I'm Greg Greenberg, here with Jim Cramer. Jim, we got a flat market, but one thing I have noticed is from these earnings, we've been getting a lot of pin action.
Absolutely. One of the reasons we are is because whether it be Eaton yesterday in the spillover of Parker Hannifin and Cummins, or whether it be Black & Decker today, is that the expectations are so low that when we hear anything good, we realize that the expectations have been ratcheted down for a whole industry. So the PE multiples are down, the prospects of Black & Decker being most instructive because there had been this big inventory glut. So if the inventory glut has been relieved by Black & Decker, it's pretty reasonable to expect that it's been relieved at the Sears Craftsman level too.
And it's interesting because it looks like you're getting the pin action from Black & Decker in Sears. I don't know if people are thinking about that Eddie Lampert securitization of the Craftsman, that article.
Some degree, and that was a great Business Week piece, but I think it's also something else. If you go back over the last Sears quarter, it's very clear that the division that was most hurt was outdoor/hardware. And now, obviously, the Whirlpool Kenmore, that's a private label, Kenmore for Whirlpool, is still very tough. We saw David Bolotsky, we saw Matty Fassler upgrade Best Buy yesterday with the hopes that we've caught a bottom in durable good purchases. So when you put the Best Buy overlay with Sears, there's some pin action, and you put the Craftsman overlay with Black & Decker's more pin action, and you realize that retail clothing had been doing very well at Sears. You have a story that was supposed to be trapped at between the 185 and 190 strikes that may be breaking out here.
Seems like it is. All right, the other interesting thing, there's a great article today on TheStreet.com by Dan Harrison. It says, Asia's fall, a distant memory. A lot of people were trading the EEM, which is the Emerging Markets ETF. That thing went from 117 down to 105 in February, now back up to 125. Are we getting complacent again?
To some degree, we could be complacent in the sense that that the Chinese government doesn't like this. They're against speculation, so it's
only until the Olympics, 2008. Everything changes.
But one of the things that really annoyed me was that I happened to be on with Erin Burnett at Street Signs, and she had put a series of managers who invest in China, and every one of them felt that the decline was not a buying opportunity and really scared people off. Maybe next time what will happen is people recognize it for the buying opportunity that it is.
Yeah, they were wrong. Seems like Asia's really bounced back.
They were horribly wrong. And, one of the things that I've been emphasizing is that when a decline happens, maybe it's prudent to buy, not run from it. This is still very contrary. Why it's contrary just drives me crazy.
I don't want to drive you crazy. I want you here back here on Wall Street Confidential. Jim Cramer, Greg Greenberg, Wall Street Confidential.